If you were paying attention to real estate at all in 2022, then you know it was an absolutely wild ride. And believe it or not, I'm actually going to be making my top predictions on what I expect to happen in the national real estate market in 2023 in this video, okay? So I'm gonna be giving you guys my perspective as a real estate professional on what to expect and what I think is gonna happen, all right? Jake Fletcher here with the Fletcher Group at eXp Realty, your Miami real estate agent, and we're gonna be covering everything from what I expect from median sale price, supply, demand, interest rates, all kinds of good stuff. So definitely make sure you guys stick around to the end of the video so that you get all those perspectives. And as a quick little note, over 90% of people who watch my videos aren't even subscribed, which is like, it costs $0.00. Just hit subscribe for me real quick and I salute you, okay? So let's jump on into this video. All right, so prediction number one is interest rates are going to stay relatively stable until the second half of the year, when I am expecting that they will lower, okay? So as inflation gets under control, the Fed will lower their overnight bank rates, which in turn tends to have an effect on mortgage rates, okay? As the Fed lowers that overnight rate, we should see mortgage rates come down a bit too, okay? It's not a direct correlation, but the Fed has pointed out numerous times before that one of the main factors that's affecting their decision-making is what's happening with inflation. So as that inflation comes down, the Fed should lower their overnight rates, which should have an effect on mortgage rates, sending them downward, okay? Now, why that trend is a thing is a topic for another video. Just know that as we see inflation come down, we should ultimately see mortgage rates coming down too sometime after that, okay? Now also, inflation tends to be stickier than we like to hope. So even though we're seeing signs of inflation starting to ease, like gas prices going down, which affects almost everything, it's still gonna take a while for the Fed to feel comfortable lowering those overnight rates, which Jerome Powell, he said as much as that in the mid-December meeting in 2022. So, right now we're actually at 6.5% for a 30-year fixed rate conventional mortgage, as you guys can see right schmeall. And I'm expecting to see those rates closer to around the 5.5% or 5%, which is where we were, before the rates really went crazy here, as you can see. So I'm expecting to see us get back to this level around the end of summer 2023. Could be a little bit after that, but I think the earliest that we'll see that is gonna be around summer 2023 this year, because it's 2023 now, hello. But, I don't think they're gonna get much lower than that. And the reason why is, as I've mentioned in another video, 85% of homeowners have a mortgage interest rate that's below 5%, okay? So going much lower than that would give people more incentive to list their homes for sale, which could spark more price increases in the housing market, as buyer demand would also increase due to buyers having more purchasing power from those lower rates, okay? So the Fed is trying to avoid that sort of feeding frenzy scenario that was happening, about a year and a half ago, because that's not gonna help with inflation. Prediction number two is that sales will uptick slightly from 2022, but will remain relatively low, okay? So the back half of 2023, when interest rates decrease a bit, is going to help the overall sales for 2023, but the first half will probably look very similar to 2022, when sales were heavily impacted by high mortgage interest rates. Sales have basically gone into the gutter. Things ain't looking too good, but I think once rates come down, sales will start to normalize a bit. My prediction on the exact percentage increase of sales, I'm expecting to see about a 10% increase of sales in 2023 from what we had in 2022. So wanted to show you guys this little graph here. So I'm expecting that sales by the end of 2023 are gonna look something like they did in the end of 2019. So that's this blue line right here. 2022 is the black line there. So I'm thinking that we're gonna get back to kind of this level of sales that we had pre-pandemic. So I think we're gonna see, a decent amount. It might not be the same amount of sales as 2019, but I definitely think we're going to clock in at least 10% higher than what our sales were for 2022. So we'll see. That's a complicated one, but we're going to be keeping an eye on it, just like all this other stuff in this video. So prediction number 3, drum roll please. Inventory will remain low. I know that's a groundbreaking take. Inventory has started to pile up in the back half of 2022, and we'll likely see that trend continue, as long as sales remain low, due in large part to high interest rates. So, as long as sales are low, they're going to be less than the amount of new listings that are coming on, and we're going to continue to see kind of inventory slowly piling up. So the piling up of inventory has started to reverse as less new listings have come onto the market, which is normal for the last quarter of any year, but demand still remains pretty strong, and it's strong enough that this is resulting in a reversal of the trend of increasing supply, okay? So I'll show you guys that right here. Let's zoom this guy on in just a little bit. If I can get my computer to work properly for me here. Let me put myself up here. So basically, this trend right here, this reversal of inventory starting to pile up, and all this stuff is coming from Redfin, by the way. I think we're going to continue to see this trend, and I think we're going to get back to, kind of like around this level of inventory. Sort of in probably about 6 to 9 months tops. So again, by the end of the summer, beginning of the fall, I think we'll be kind of back to this level. But you can see what I'm talking about, the reversal of the trend, of increasing supply as we've had less new listings towards the end of the year. But that trend should, you can see how it kind of undulates. It kind of goes in waves, right? So we should see, boom, that little wave should reverse, again, and then should be back, to a more normal level. So that's what I'm hoping. Fingers crossed, that's all we can do. So another thing here too is that as long as interest rates are still in this sort of 5.5% to 6.5% range, sellers will continue to have less incentive to sell if they don't need to, okay? So here's another graph for you guys, because we love graphs. And again, 2022 is the black line there, 2021's the orange line, 2020's red, and then 2019 is blue. So you can see how much more inventory we had pre-pandemic. Pandemic happened, things started not looking so good. 2021, was like sort of normal looking, but a overall low supply. And then 2022, we reversed trend, right? We're getting better than 2021. And then the back half of the year, you have that holiday slump a little bit down there. But hopefully we're going to see that thing go vrooga-dooga-dooga-doo, and then, end up somewhere closer to the 2019, somewhere between 2020 and 2019 levels, like right around that, 1.1 million units for sale this time next year. So we gonna see, all right? And prediction number 4 is that we will remain in a seller's market nationally. Now, this is not necessarily a groundbreaking hot take, but it's an important thing to point out so that people have the correct expectation, okay? So the last time that we weren't in a seller's market nationally was in February 2012, okay? So let's check this out. We're gonna look at months of inventory, okay? So that was over 10 years ago that we had that. Boom. You can see right here, we were above 6 months of inventory. That was in February of 2012. So that's kind of crazy. And FYI, a seller's market is less than 6 months of inventory. So that's why we've been in a seller's market nationally for the last 10 years. 6 to 12 months is considered normal market activity, and over 12 months of inventory is considered a buyer's market, okay? Now there's some competing opinions about the definition of that, but basically the most important thing to know is that less than 6 months of inventory is a seller's market. That's where we've been, and that's where we've been stuck, all right? So months of inventory, by the way, also is how long it'll take to sell the existing supply if no new listings came on the market, okay? So months of inventory has increased from the low point in December 2021 when there was only 1.1 months of inventory. That's right here. It's crazy. And right now we're at 2.7 months of inventory. So by the end of 2023, I'm expecting that nationally we'll be around 3.8 to 4.2 months of inventory, okay? So again, we will see. Now, prediction number 5, drum roll please. This is the one you've all been waiting for because we're talking about prices, what's gonna happen with prices. And my prediction is that prices will end the year down 5% from where they are now, okay? So I know, groundbreaking stuff. We've already seen prices come down a bit. I think they're gonna continue to go down a bit, but I think that, you know, where we're at right now, we're gonna end next year about 5% lower than where we're at right now. So median home prices have almost entirely lost all the gains that they've made over the last year. And you guys can see that on this graph here. See the orange line and the black line starting to meet. So, you know, this is 2021 was the orange line, right? And 2022 was almost back to where 2021 ended at, okay? And, you know, right now the median sale price is $352,000, which is only 1% higher year over year than where 2021 ended at, okay? So if I'm correct and we do have a net 5% decrease year over year, then that would put median sale price at $334,000, which I know people would appreciate going from $352 to $334. And this will most likely be led by the slight increase in inventory, continued by, with low sales numbers and persistent high interest rates, all of which we have discussed in this video. Now, I do think that we could see median sales prices go lower than 5%, like I alluded to a second ago, you know, at some point during 2023, maybe even as much as 10% less than where we're at now. But I am expecting that by the end of the year, AKA the year over year number, will be 5% lower than what it is at this moment right now. So we're gonna see, you know, all this stuff is documented on video now, so in a year from now, we'll be able to take a look back, see if I was right, see if I was wrong, and you guys can subscribe accordingly. Just kidding, you should already go ahead and subscribe. Drop me a comment down below if you guys agree or disagree or have any other you know, opinions or have a hot take that you wanna share. And yeah, that's about it, guys. You know, if you need any help in the Miami area, I'm here to help you guys out, treat you like family, that's what I do. All my contact info is in the description down below. Reach out anytime you'd like. And until the next time, I hope you guys keep on winning. Peace.